it's been a heck of a week to watch. And even though there are all these bad news headlines that are out there, the markets are doing really well. NASDAQ up by more than 5%. Is this a turning point? Is this a head fake? Is it just because there's so many people who are out on vacation right now? What do you think?
Well, first, you're having a great time, so thank you for making us laugh. It's good on a Friday morning to laugh like this. Look, I think it's a combination of a relief rally and lower yields. That's what has been driving it. But the next few days, especially for the NASDAQ and on the back of the Snap results, are going to be absolutely critical. So the next few days are going to be very important in determining what happens next.
What do you think of the Snap news? Is that indicative of much more than just issues at Snap?
Oh, yeah, because the user base increased significantly, and yet their revenues were flat. So It suggests that there's something going on in the business that is not generating revenues like it used to. And the question...
Oh, go ahead.
Go ahead. I mean, I think what you just were about to say, I think the question that all of us have is, are we seeing a significant softening in enterprise advertising? Because if we are, then that's going to impact the other names in that space.
That's what I was wondering. If they are citing increased competition, who's the increased competition? They also talked about some of the changes they made on their own platform. That's trying to figure out how much of this is self-inflicted, how much of this is the broader advertising market. What's your gut?
So I think it's broader. I mean, we're going to get the PMI data today. The PMI data that came out this morning in Europe was awful. Right. There are signs that the global economy is slowing in a rapid fashion, and central banks are hiking and doing QT into the slowing economy. And that just heightens the policy mistake that we're in the middle of with respect to central banks.
Is it going to be effective in terms of its intended goals for these rate hikes, going after inflation? You think it'll slow down?
Yeah, I think inflation has peaked in the U.S., at least for the next 3 to 4 months. We got to see how sticky some elements are. But the problem is not that inflation is going to come down. I mean, that's a really good thing. The problem is that inflation is going to come down with growth probably going into recession. And that's not good news.
Hey, Mohammed, the next 10% in the S&P, and no one should ever answer a question like this, but the probability that the next 10% takes us up to, it's at 39.98, so it would take us up to over 4,300, 4,400 or so on the S&P. That possibility from here versus going back to the June 16th low of 36.39. What is more likely in your view as far as the next 10%? Because I can just tell you, I mean, the consensus, I'd say 90% of the people we talk to say the next move is going to be down to the 35, 36 range. And I just get uncomfortable. Even though the VIX hasn't hit those extreme levels, it makes me uncomfortable that all the experts say we need to go back down and maybe make new lows.
So Joe, you've got to define a time period here. Are we talking about the next couple of months? Or are we talking by the end of the year?
Infinity. What do we hit first? 4,400 or 3,600? You don't need a time on that. I don't care when it is. Just what's next? Do we
okay,
hit 44?
Where would we be? I agree with the 90% that you've cited. Look, we have played out interest rate risk. We haven't yet played out recession or credit risk, and that's going to impact equities. And
do you ever get bullish during the financial during the pandemic? You never did get bullish till we were already all the way back almost. You stayed too long in the bearish. You stayed too long in the bearish camp.
Go back to CNBC in April, and you'll see that that statement was incorrect, Joe.
I was there. I got so much Twitter hate mail from challenging you on those things. I can go back and find it, Mohammed. But go ahead. So at this point, you're saying that you're in the 90%. That says that we go back to 3,600 first.
I am, because I'm seeing the economy slow, and I think the Fed has no choice but to hit the brakes because it is so late. And the consequences of that is going to be pressure on earnings.
Hey, Mohammed, what do you make? We always have these crypto conversations. We've seen crypto actually move higher recently. I don't know if you think that's a reflection also of just the market that's moved back and forth here. We're up now over basically 2,300, 23,500 basically. What do you think that says, if it says anything?
says two things. One, I think it is moving with what has been a relaxation in financial conditions over the last 2 weeks, and that's helped crypto. But it's saying something else, is that a lot of people think that the second or third, depending on how you count, crypto winter is now behind us, that the damage has been absorbed, that there's been a flushing out, if you like, of excesses, and now we have a better base to go forward.
So, Mohammed, just in terms of the earnings, earnings coming down, I'm assuming you also think that earnings estimates need to come down pretty significantly too. So we're not trading at like 23 times forward earnings. It's actually a higher number because the earnings, the E part of the PE has to come down.
Yeah, I mean, the thing I've been scared of for the last year, and that's why I was so hard on central banks that they should get out of this transitory mindset and start moving last year. The thing that scared me the most is that they would start hiking aggressively into a slowing economy. And that is what's happened. And over the last few days, we've started to see signs that the labor market may not be as strong as we had hoped it would be.
Right.
So when you put the macro together, it suggests that this pressure is going to extend from the general economy to corporates. At the same time, we are going to see a lot of pressure for wages to go up. People don't like the erosion in their real purchasing power. 9% inflation hurts, and wage earners are going to react. So you're going to see both the revenue side and the wage cost side go against earnings. And that's what I'm worried about.
I saw a statistic yesterday that something like 35% of households are now having trouble paying their bills, trying to find ways and shift things around because of inflation. Is this going to be a divided economy where the differences between the haves and the have-nots really start to come into sharp focus once again?
Yes, absolutely. And the AT&T numbers, statements telling you that people are falling behind on their phone bills. Yes, the shock, the inflation shock, and now the economic insecurity shock, the income insecurity shock, is going to be another great unequalizer. Yes, absolutely. There's going to be a massive distribution. Some people are not going to feel anything at all, and others will feel the twin shock of first inflation eating away at their purchasing power, and then them being worried about whether they're going to be able to sustain their incomes.
Will all of this make the Fed slow its roll a little bit? I mean, if you think inflation's already peaked, and if it looks like people are really starting to get pinched, will that then make them hold off, maybe do some very big moves now, but within a few months they kind of are on hold and watching and waiting to see what happens next?
That's what the market is pricing. The market is pricing that the Fed is going to go hard, and then it's going to have to stop because this economy has gone into recession. I mean, just look, it's incredible to see what has happened to yields in 24 hours. We've traded in a 21 basis point range for 10 years. That doesn't really happen. That's what the market is pricing in. The worry about the Fed is that they don't know how sticky inflation is. They don't know how much they've de-anchored inflation expectations by being so late. So they're not going to stop immediately, but they are likely to stop when they see the economy go into recession.
Mohammed, thank you. Always great to see you, even with the bad news. And have a good weekend.
Thank you.
Okay, coming up on the other side of this chair, that could make sense in your portfolio. And then later, our good friend, Dr. Scott Gottlieb, is going to join us to talk about President Biden's COVID diagnosis, the reappearance of polio in the U.S., and so much more. You don't want to miss that conversation. And a reminder, you can watch or listen to us live. You can do it anytime. You do it right now on the CNBC app. We're back after this.